SPY has closed at a new all-time high. Here it is, guys. 435.52. And I had a price target. If you watched my video from yesterday, I did have a price target on the SPY at 436. So we were 48 cents shy this week. And as you can see in the post market, still going up a little bit, but it still didn't hit my 436 price target. All right, so we still have this strong bull trend. SPY's in this wedge right here. Remember yesterday I spoke with you guys about vector candles and how institutions like to fake us out. As you can see here, SPY broke out, closed above the resistance, got us thinking, hey, we're gonna keep on going higher. And what happened? Boom, they took us out. False breakout. Next day, after they got everyone thinking they're bearish again, or they should be, not everyone, but the majority, they sent the SPY right back up, gave us this nice looking hammer candle, not a perfect hammer candle. Well, we got buying pressure, pushed it right back up and closed above again, and then boom. Now this day, I showed you guys to put the call ratio. Calls for the SPY were starting to increase and surpass the puts. And the very next day, we got the dip. I've said many times we don't buy the tip, we buy the dip. We got the dip. And then, just like that, all the puts started to increase. So let me bring up my moving average. Do a little review on where I like to enter. Okay. And now, as you can see, there's a lot of lines, there's a lot of information, but our moving averages are stacked on top of each other. 5-day, 13-day, 20-day, 50-day. This shows a very strong bull market, bull trend. And if we go lower, you'll see the 200-day all the way down here around 385. So this is a very strong bull market. So in a bull market, we want to remain bulls. So when we get the dip, that is when we buy. When it hits our support level or around our support level, that is when we buy. Now, the way I like to enter, you can check here in history, recent history. In a strong bull trend, the SPY, it likes to move up along the 5-day moving average. So the way I like to enter, obviously, I like to use the moving averages as support and resistance level. So I would look at them as support or resistant levels. So when the SPY dipped here, it opened at 428.70, right? 428.78. But it wasn't quite at my support level, because my support level at the time was this 13-day moving average, which was around here. And then I saw the SPY came down, and it went even lower than the 13-day moving average. So the people, the market makers who push these markets, who create these big green candles, all these big red candles, they like to enter where the stop losses are. Areas of liquidity is what we call them. What that means is there's money above resistance and there's money below support. So if support was at 428.15, I would look to enter below that number, which SPY dropped down to 427, and then it rolls back up. Today, the SPY broke a resistance, the 5-day moving average. I said to you guys yesterday, I'll be watching for the SPY to test this 5-day moving average and see what happens. If it failed to break the 5-day moving average, or intraday goes above it but then cannot stay above it, bearish price action. As you can see, it broke all of that. And I said that I was bullish, and I have a 436 price target. We got very close. Now, is it time to sell? Well, I don't think so. Because strong bull trend, not to mention the put to call ratio. Once again, look at that. The put volume compared to the call volume. Something is causing the retail traders to bet to the downside. There's too much money betting to the downside from the retail traders, and the market makers aren't just gonna let that pass up, are they? So of course they want to take all of us out that are betting to the downside. I'm gonna squeeze them out. Okay, so I'm still bullish on the SPY. Why? Because it's a bull trend. Still got the 436 price target, and if it breaks 436, I have 443 next. I'm using the Fibonacci level, guys. Okay. So if I was to use Fibonacci here, this is where the trend would start. Oh, wrong way. Let me do that again. So over here, when I did it the other day, this was where the wave 3 would have been. Then I brought it down all the way here. Because when I used the Fibonacci level, it was literally like a month or two before it even hit my price target. So when I first did the Fibonacci level, I started here and I did it here. Got all the way down where I believe the trend began, which is when I had my 436 price target. That's when I began to have it. If it broke this high. So I believe the fifth wave would have took us to the 436 price target. So we're very close. However, if it does hit the 436 price target and break it, Fibonacci says 436.45 to be exact, next price target will be 443. Not guaranteed, but that's where my price target will be if it breaks that level, and we're going to play it day by day, level by level. So like I said, 48 cents short of my price target. Almost there, 436. And maybe, just maybe, we'll finally get some decent pullback around these levels. Maybe we'll get some pullback around these levels, because if they set up these resistant levels here purposely, faked us out a few times here. So obviously, around this level is where the retail traders will probably enter their puts or start to short. But you can look at the put to call ratio, they are. And maybe here they will set their stop loss. So maybe they set their stop loss a little higher this time. So I think if we are going to get a pullback, we may get a pullback around 436. Now, I have my Discord that I would love for you guys to join. Definitely send me an email if you guys are interested. But I write market updates almost every day. This was today's market update. And I had my price target, 436, right here. Okay? Wrote that this morning. And in this room, I usually write the market updates in this room. Today I made a mistake, but I just left it. So there, all right? That was yesterday, a couple days ago. Okay? 436 price target. I've been saying this, guys. We got very close, and I'm going to stick by it. Still going to be a bull in this bull market. Doesn't mean I'm going to enter at these levels, because I already entered lower at the dip where you're supposed to. Where you're supposed to be bullish the most, but most retail traders become bearish. That's where you enter, guys. And it's been paying off. So I'm going to stick with my conviction. 436 price target. Still bullish. All right, guys. So moving on to the triple Q. Triple Q also closed at a new all-time high. Now what I mean is, right here, triple Q's all-time high is 362.76. It got that high intraday, but on this candle it closed at 360.95 cents. Over here it closed at 361.01 cents. So this is a new all-time high close. Now look where it got rejected, right at our support level at 361.84. Okay, however, triple Q is still trading above the 5-day moving average. All the moving averages are stacked on top of each other. There's nothing, like I said before, there's nothing telling us that this is a bear market or a bear market is near. Okay, now I do have that we're in the UTAD phase in the wick off distribution, which is where I'm expecting a top. but it doesn't mean the top's going to happen right away. Okay? However, I do want to mention that RSI is very overbought. Okay? I will acknowledge that. It's been a while since QQQ was as overbought as it is now. Okay? So, even though I am still bullish on this, and I'm bullish because it's a bear trend, the trend is our friend, I do not recommend entering at these levels. We're at a resistant level. That is not where you want to go long. You go long at a support level. And you want to try your best to enter where the stop losses are set up with that stop loss. So it's usually under the stop loss. So the stop, if the support is at 355.37, you want to try your best to enter just a little below that. Enter at the areas of liquidity. Okay, that's my tip for you on how to enter trades. Okay, so charts telling us we're still bullish. Yes, we are overbought, but hey, this is just an RSI. I don't use this to make my main decision. It just assists me. It just tells me that we are overbought. That's it. That the buying is really strong. Okay? Now, if you look at the PC, the put to call ratio, okay, because most retail traders or beginner traders, they like to trade using the RSI. That's like their favorite indicator. But you guys got to realize the RSI, it just lags, you know. Unless you see a divergence or something, that's why I like to use them for, you know, to assist me in my decision making. But look at the put to call ratio. So many puts compared to calls, guys. So you got probably a bunch of retail traders looking at the RSI. Oh man, the RSI is so overbought. You know, we're at all-time high. I don't know, and then they want to short the market. So, or buy puts, bet to the downside. So market makers, they don't want us to make that much money. So they could try to squeeze us all out and hit our stop loss. If they entered at this support right here, this resistance, where you think they're gonna enter at where you gonna think they leave this stop loss? Right above the resistance level. So right here, all the way up to this upper Bollinger Band is an area of liquidity. Okay? They could push it up, knock out everybody's stop loss if they wanted to. They can even push it down, knock out all the breakout traders. They can do what they want. This is why I say we must enter at a support level, or watch the support level and enter at the area of liquidity. Gotta be disciplined. We gotta have the right mindset. A trader has the mindset of a hunter. We're hunting for trading opportunities. We're hunting for trade setups. And we're making decisions based on the information is given us. No apologies necessary. Alright, so yes, I am bullish on the QQQ, but remember, QQQ is not a stock, it's an indice that consists of many different sectors and hold many different stocks. Now, one of the biggest stocks that the QQQ hold is Apple. Now, let's take a look at Apple. Said it many times, say it again. Apple is a market moving stock. Now look at this beautiful W pattern. Okay? Now the thing with W pattern, now if you're down here somewhere, of course, you should be bullish. Broke this right here. Bullish price action right here. Because it could have been a downtrend continue, but nope, it broke out, right? Broke this lower high and it continued up. Now where did it get to? A previous high. So if we take a closer look, you bring the RSI down. There you go. So on the July 7th, we did touch this resistance line for the first time for a potential market top. Next day, we gapped down, big gap down, right? Right down to the 5-day moving average support, took out the stop loss, and then moved right back up. Now today we got another big green Shrek candle. And where did it stop at? It went to it broke the resistance level. The resistance level of 144.94. And it got up here. Now people start shorting this because, you know, they see a double top. W pattern, double top, whatever. Of course they're going to start wanting to short this. Especially when SPY has been moving up. Apple has been moving up
almost looked like it went parabolic, right? So much green candle, barely any pullbacks. So of course retail traders gonna look at it and like, we gotta get a pullback. So what did they do? They got us to the resistance again, broke it, and took out the stop loss. Is that what happened? Maybe. Okay, but I can tell you that there are lots of calls right now. So maybe this is a bull trap. And they'll try to break down. Alright? Because stocks can't go up forever, guys. It cannot go up forever. So yes, we got this potential double top. Got market makers pushing up past resistance, taking out the stop loss. So what will they do next? Potentially, we can finally get that pullback all the way back down to 138. Okay. Now, where am I getting this level? That was a previous high over here, all the way over here. Okay. Which is also where the 13-day moving average is. Now, that pullback is not guaranteed. Because if we have a lot of people thinking this is a double top, they could push the apple up even higher and taking out all the people betting to the downside because they see a double top. Okay? These patterns are not guaranteed. They are taught to us a certain way, and the market know how they're taught to us. And they'll know how to fool us and trick us and get us emotional. It can be difficult, you know. Got to quiet down the lizard brain, that part of your brain that makes you paranoid, that makes you freeze. You know, that freeze, fight, and fight part of your brain is very, you know, it's not good. It's not very helpful for us as traders or even investors. Okay, so right now I am going to be on the sideline for Apple. I'd say watch this double top potential. If we see the 5-day moving average get broken, we see a big engulfing candle, bearish engulfing candle, and it starts going down and volume starts to increase. Right now we got a lot of volume pushing to the upside, but if we see volume start to increase and it's going down, that's most likely that we're getting some type of pullback or correction. But if we're dipping a little bit and the volume's low, it's okay, guys. Buy the dip. This is a bull market. Okay? And if it does drop down to 138, it's okay. That's not a bad drop. It's still bullish. We got another previous high right here. It could drop down and retest this area around 136 to 138 level, which is also where the 20-day moving average is. Okay? So like I always say, do not buy the tip. Buy the dip. Yes, this is a bull market and we should remain bulls. But wait for the pullback, guys. When it happens, don't be afraid. Remember what I said. Buy at the area of liquidity of the support level. All right? Moving on to our cryptocurrency, Bitcoin. Hello, Bitcoin. Let me lower down this RSI here. We're going to talk about the RSI a little later. Now, I know earlier I said I'm not a big fan of the RSI, but it does assist me. It's not the one thing I use to make my decision. It assists me. So, speaking of assisting me, we got the wick-off accumulation. As I said countless times. And as you can see, it's still following it. It's on track, guys. For all y'all that's in denial, for all the bears that's saying whatever, the end of phase C, we're expecting a lower high. A higher low. This is a low, this is a low, this is a low. You get the higher low. End phase C. That's what we're expecting to get. Right now, that's exactly what we're getting. And if it does drop lower, that's okay. Because we can get multiple tests. As I said yesterday, a spring is often followed by one or more tests. Okay? So it's not going to shake me out that easily. I'm still bullish on the crypto market. I'm still bullish on Bitcoin. It's the future. This is long-term stuff, guys. Long-term. Okay, so if it comes back down to this area, you darn right I'm going to accumulate. But do I think it will? I don't think so. We still got the higher low here. Potential double bottom here. Now we had the support level right here. This blue line, which is based off of this. Okay? It's been tested before here as well. Here as well. And what did it do? It went to a support level, broke below the support level, and took out all the stop losses, the area of liquidity. I'm trying to mention that a lot so you guys get the concept. This is how I enter my trades. I don't enter at support. I don't enter at bounces off support. I enter at the stop loss of the support. Yes, it's more risky, but the reward's there. You want rewards, you gotta be willing to take the risk. All right. So if the market makers are entering at areas of liquidity, so will I. Okay. And right now they're buying it up. They are buying it up. Okay. This, to me, is a lot of buying pressure. Now, granted, we are still trading below all the 5-day moving averages and the 20 days and the 30, all the moving averages. So there's extreme fear. You look at this market right now, it's a bear market. I won't deny that. I won't. But like I said, Wick-Off accumulation is taking place right before our eyes. And I believe in it, okay? I also want to mention that here, let me show you, take this line here, that's a downtrend, right? Got this downtrend right here. We can even start right there. Let me take out all the indicators. Remove them to make it look a little more cleaner. I'll even remove this green line right now. So we got this downtrend. We got the high, we got the low, we got the lower high, we got the lower low. This is clearly a downtrend, right? It's down and it's trending down. And you look at the RSI. What do we got here? What do you notice? Do you guys see it? We start here, bring the line up here. Now the RSI is supposed to be a lagging indicator. It's supposed to follow the price action of whatever we look at, the crypto or the stock or the index, right? Now this is on a downtrend clearly. However, the RSI is on some type of uptrend. This is called a divergence. And in this case, since it's coming off of oversold territory, this is a bullish divergence. Now, bullish divergence does not mean that the stock or the crypto is going to go up right away. But what it does mean is that a correction need and should happen. It doesn't mean the correction will happen right away, but eventually will. Now, what I can say is this is a bullish, yes, bullish divergence. Y'all can look it up. Okay, so we got that. This is, like I said, this is not the only thing I use to make my decision. This is assists me. I want to stress that you guys, so you guys understand that. Got bullish divergence. And what else do I see? I see that Bitcoin is close, very close to the end of phase C of the Wick-Off accumulation. And we're going to get that big move coming, guys. It's coming. Market makers want to fake everyone out, and once they get the fear at its highest, that's when they're going to get greedy and start pushing, and then people are going to catch FOMO. Okay? At these boring prices is the best time to enter, guys. This is where you want to enter. Not after it already made the big move. You want to catch it before it makes the big move at the areas of liquidity, the areas of value. This right there, this support level was our area of value. Underneath that support level was the area of liquidity. Okay? You guys see why I'm bullish on Bitcoin, and see why I've been accumulating on almost every dip? It's worth it. This is the future. This is long term. Okay? Speaking of the future, now Dogecoin is not, as in my opinion, is not at Bitcoin level. But I am also a trader, not just a long-term investor. And price action is king to me. So it got the Wick-Off accumulation for Dogecoin as well. ST and phase B. Now, Wick-Off aside, I had this support level right there at 19.6. Got the bounce off it right there. Beautiful bounce. Now, I accumulated at this level. So it bounced off of it, so I did not actually accumulate it. But look at that. The next day, it went just below. And yes, I did enter at just below. 19.4 cents entered, okay? For a little bit more. However, price action is still bullish, bearish, excuse me. Can't even break past this 5-day moving average yet. Still finding resistance at this 20-day moving average. So technically speaking, we are still in a bear trend with bearish price action. But my conviction lies in the wick off. I believe we are here. Supposed to get some bounce below the previous secondary test, not in phase B, but in A. All right, which is what's happening. We're below it. We're getting strong bounces off of this support level. So when will we enter into the bull market? When? I think very soon, guys. As soon as we stop getting all these bad news. All right, and for people that think China hates Bitcoin, guys, they're like number 2 or number 1 in the people that's holding Bitcoin. They have a very large holding of Bitcoin. If they hate Bitcoin so much, why are they still holding? They probably want it cheaper. These guys are probably accumulating more for all we know. Okay, now that's just speculation. Take that with a grain of salt. Okay, so I am still bullish on the crypto market. Buy the dip, guys. Doge, I am not a big fan of it as Bitcoin, but price action looks good to me. It's cheap, so I accumulated here, and you darn right I started accumulating today. Okay, so let's get into that bull market. If Bitcoin goes up and enter phase D, Doge will become bullish as well, and so is all the other altcoins, especially Ethereum. I love Ethereum, Ethereum Classic, okay, Polygon, Cardano, all that good stuff. All right, I hope you guys got something out of this. I hope you guys found value in my video. Thank you for listening to me, and you guys crush this market, beat this market. See you next time.